The U.S. and China recently announced what's being described as a pause in their ongoing trade tensions, with both sides agreeing to roll back some tariffs and resume broader negotiations. So what's really in this agreement, and what does it mean for the state of global trade, inflation, and economic stability? Derek Burleton is Deputy Chief Economist with TD. He joins us now with some insights. As I said, I'm just going to ask you what this means for everything, which seems the easy question to answer. It's being touted as a major trade victory. That was priced in, I'd say, somewhat into the equity markets. We saw huge rallies. How are you seeing this?
Yeah, I mean, it's great news. I mean, we've all been worried about tariffs and further escalation. This dials back the temperature to some extent. It is a reprieve. It's a 90-day reprieve, so there's still a lot of uncertainty. Tariffs are still high, but yeah, I mean, if you've been worried about a U.S. recession, I think this is certainly going to help to mitigate that risk. You know, in terms of who won, big victory. I think, if anything, China was probably a bit more the winner. You know, with when you look and see what happens, I mean, tariffs were dialed back more than expected. We had Trump out on late last week saying 80%. You know, they came in a lot lower than that. Good news. It was good. China did show good faith by scaling back some of the restrictions around critical mineral exports. That was certainly something the U.S. wanted desperately. But apart from that, I think really the end game here is that tariffs are coming down. They were too high, and I think it should help the economy in a near term, where the data's still been quite solid and favorable. This should help to mitigate on some of the downside risks of recession.
To give credit where credit's due, I think you guys were also predicting, we weren't going to see a deep recession. You're going to skirt that. So this bolsters your view, I think, in terms of what you're seeing. But maybe just tell me what you see practically is still going to happen. Because, yes, there's something in place that it provides at least the framework for something positive is going to happen. But I'm still seeing, in terms of, you think about supply chains, we have yet to see the impact on inflation, had some soft numbers coming out, but none of that's been priced in yet. So what are you looking for? Yeah,
inflation's still going to rise. We've had good favorable data entering this period of uncertainty. The April CPI data was good, favorable. The employment data has been holding up, so that's all great. I think, though, as we move into May and June, you're still going to see inflation accelerate, albeit when you look at consensus views of U.S. core inflation up over 4, that does look too high to me. I think something with a mid-3 handle peak later this year still seems reasonable. But yeah, I think one of the uncertainties is just on supply chains. We've had a real decline in the number of Chinese tankers at U.S. ports, worries about supply. I think what we'll see in the coming months to mitigate some of that pressure is you will get more shipments of Chinese goods in the coming weeks that will help at least to some extent relieve that. But it's still going to mean prices will get bid up, I think. So, yeah, it's one of these stories where, we have to come back. Tariffs are still high. I mean, you look at the, the Chinese effective rate, tariff rate, it's still at 40%. It's just lower than 80%.
Yeah.
You've got the existing tariffs plus the pre-existing tariffs. So, still that some of those negative effects are still going to show up in the coming months in the U.S. data, but don't expect a recession.
Yeah, okay. Yeah. Well, you heard it here first. Not first. You heard it with you guys first. We just talked about it. What about a pattern? I mean, in terms of, as you try and forecast what's going to be happening and maybe a potential, deal with Canada, and you see, I'll say like patterns that are developed in other trade deals. Is there anything that you learned with what happened with China that you can extrapolate and say, okay, this is where we think this could end up in other places?
Yeah, I think, probably a better thing is the UK-US. That was more of a trade agreement.
Yeah.
And even though that was the lowest of low-hanging fruits, I think when you look at UK-US trade, it's not that high. The UK runs a trade deficit with the US, so that's the reason why they got a deal done. But a few things I took away from that 10% is the new zero for tariff.
Yep.
I think, that's kind of a base rate that they're going to be targeting to generate in part some revenue to cut taxes. The other thing is Buy America. No big surprise there. We're going to see a lot of deals with Buy LNG and, Boeing and all that. And the third thing that I think for Canada we need to be somewhat aware of is that the UK, there will be quotas in place. And I do wonder if this is something, when we do get around to looking at U.S., Canada, Mexico trade relations, is that something that the U.S. is going to try and build in, which is not really a free trade agreement, but, there may be some efforts to build in quotas. We don't know. I don't think it's something that I expect is going to happen in the very near term. I don't think Canada is a very high priority. It's a lot of these other countries in getting trade deals. And Canada may very well follow, but right at the end of that review period, which is sometime in 2026.
That seems like a long time away, just given what you're saying. I mean, I'm thinking with, Prime Minister Carney, he's got a new cabinet in place, and as they start the machinations to get ready for these, when you just say that, I'm like, wow. That's a long time away to actually think about a deal could take that long.
It is, especially in 100 days, what we've seen happen.
Yeah.
It's amazing that sometime mid-2026 does seem like a long time, but I don't think it's going to be a real priority for either side. I think Canada, when we get that budget, when we get, the big fiscal push, it's going to be more on diversifying away from the U.S. That's what they got elected on. Not running away from the U.S., but building more infrastructure, diversify within Canada, outside of Canada, Europe, other Asian countries. And that's going to be more of at least the focus in the near term, at least in messaging. So it will follow. Obviously, U.S.-Canada trade's very important to both economies, but I think that will be the push. It's going to be more how we diversify markets for minerals and the like.
There's no shortage of things to concentrate on, that's for sure. What do you see, what are you going to be focused on the Canadian economy then over the next year? If we just set as a base case 10% tariffs were something maybe that we end up towards, and maybe there's another agreement that shelters part of that. But, we've started to see news of plants shutting down and, fewer shifts happening in auto factories, and it's starting to trickle in different areas. What's going to happen?
Well, it's trickling into the hard data. We've now had 3 weak months of employment. So unlike the U.S., where the hard data has been holding up, it's really the sentiment data that's been weak. In Canada, the hard data is starting to soften. So it is starting to show through. I don't think it's going to get any easier for Canada in the near term. It's not the tariffs themselves. It's really the uncertainty. It's an uncertainty shock. And I do think to the extent we get more tariff stability globally with the U.S., that will help, with confidence here in Canada, along with hopefully some of the federal, provincial government push to shore up some of the domestic confidence with some of the policy push, I think could help, along with a modest tax cut. So I do expect we'll get through it, but it's probably going to be a couple of contractions and through this year. Maybe by the end of this year, we'll start to see activity brighten up a little bit with a better 2026. But like the U.S., a lot of potential scenarios could play out.